Let's start recording. Okay. Good morning, everybody. Welcome to another Foundation Friday. This morning, we have Reyna Fonte, who's going to talk to us about how to safeguard your real estate business. So lucky to have her here this morning. Good morning, Reyna.
Hello, everyone. Thank you for having me. Such an exciting title, as Jason pointed out earlier as we were waiting. Thank you all for coming. Today, we're going to go over really the importance of how do we retain more of our money and what those foundational items are in order to keep more money in our pocket so that we can grow our business and specifically our real estate business. I am, for those of you who don't know me, Reyna with Delve. I'm actually giving you all of the strategies in which I used when I created my company, and starting foundationally with the type of business you should be in order to protect and safeguard your business. I work with small businesses to help with business development and growth strategies. I have been working with Jason and Joe for a handful of years now, working through all their mergers and acquisitions and walking through the process of how to set your business up to really function at a high level so that you can achieve your goals, and at the brokerage level, continually achieve 10x growth. As you've noticed, everybody's a part of the Madrona Group team. There's some new faces here today. The Federal Way office, I saw Tony on here, Eric. I can no longer see who's here, so if I missed you, I apologize. But as you've watched the brokerage grow, these are some of the fundamentals that we've used through this process. And it starts at the very, very basic level. Understanding our industry, being able to ebb and flow with the market fluctuations, and understanding what it is that we have to, what concepts we have to implement, what strategies we have to employ in order to make sure that we truly are safeguarding our real estate business. The first step is understanding the business entities. Sole prop, you've probably heard of them when you come into the industry. There are a few of you on here who I know firsthand have LLCs, but I wanted to give you background and definitions of each of them so that you can understand why you make the decision to maybe start out as a sole proprietor, be an LLC, graduate to a S Corp, and even a C Corp. We're at a point with the Madrona Group that they may want to consider becoming a C Corporation. So those are some of the conversations as we go through business development that we'll talk about. And I'm just going to jump right in and start giving you the definitions of the business entities. And I do want to take a moment just to apologize. I've had bronchitis for about 2.5 months now. And I find that if I talk a lot, I'll start coughing. So I have some water. If I have to take just a quick little moment to take a drink, please forgive me. So as we go on, when you first are a broker in the business, and this is, you don't really, at this point, you're wrapped up in taking the classes and passing the exam and deciding who your brokerage is going to be. Our industry isn't great about saying, okay, you need to decide what type of business entity you want to be. I am a huge advocate of starting out your foundation right and choosing to become an entity, and specifically an LLC. But more often than not, when brokers get into the business, they'll become a sole proprietor. That, your personal income tax and your business income tax is one and the same. You don't have to identify yourself as a sole proprietor. Signing up with a W-9 and signing your brokerage agreement gets you there. So there isn't a whole lot that you have to do. And you're using your Social Security number there. And this is, for those, lower, the lower resources, the minimal capital to have, there's fewer tax benefits. And it's low overhead and low operational costs. So why would a broker choose to do that? Again, it's when they start out. and they don't really have their, they aren't deciding whether or not they want to build their business, or they haven't started out and understanding that they actually are a business. A limited liability company is a business structure that combines pass-through taxation of a sole proprietor and a limited liability corporation, that the profits go directly to the owner and they report them on their tax returns. However, with a limited liability corporation, and bear with me as we go through the definitional aspects of it, it might be a little mundane, but you'll see the trend as we move further down in your business development, how making these decisions up front with our guides and our partners, like our bookkeepers, will help us really set ourselves up for success. So with a limited liability company, I am an advocate for everybody out of the chute, and I have some clients who require their brokers to be a limited liability company before they come on. Now, this looks like you have to register with the state. You have to, have a business license. You're really setting yourself up as a business. As realtors, we are businesses. So the reason why I'm an advocate for LLCs is that I want to make sure that if we claim to be a business, we're going to act more like a business. There is more goes into this. When you get to that $50,000 to $150,000 level, it's helpful for you to separate and limit your liability, your personal liability. And so that's why people will become a limited liability company. An S Corp. An S Corp is when you start to get over that 150 mark. Let's say you're a high producing broker, you're a top producer, you're a team. At this point, you're at a point where you can petition to the IRS with the help of your bookkeeper or whoever does your taxes, and you can get approval from the IRS to become an S Corp. An S Corp allows you to take a salary and then also a contribution, and you don't have all the self-employment taxes. There are limits in how many shareholders you can have, but in an S Corp, and again, once you get to that 150 level, that would be the entity you would want to be. So for some of you who are operating as an LLC currently, it would be in your best interest, if you are at that over 150, to chat with your bookkeeper or your CPA or your accountant to find out what makes most sense for you and see if you can transition to that next level. And again, the formation of an S Corp, you have to have IRS approval, state registration. You have to have your business license, W-9, brokerage agreement, and work with a bookkeeper and an accountant. An S Corp is that over 250 legal structure for corporations. This is, you have dividends. The way that your corporate taxes, you're taxed on profits at the corporate level. Sorry about that. So what in the C Corp, that's really when you get to that level of, say you are one of those high top producing teams, you're in that one top percent. It may behoove you to, at this point, take a look at it. This isn't a very common for brokers per se. It's more at the brokerage level that you would want to entertain becoming a C Corp. I'm going to take some time to delve into and talk about the two most common structures and why. Like I mentioned, LLC is where I would prefer that any client that I'm working with is an LLC versus a sole proprietor, because my goal for business development for everyone is that we're going to grow and get to those next tiers. And so it limits your liability, and it protects your personal assets. You have more tax flexibility and operational flexibility and credibility. And in S Corp, you have tax savings on self-employment taxes and favorable taxation at the higher income levels. Both of these entities allow you to behave as businesses that can then go into succession planning. One of my core tenets is not only foundational in the startup, but how do you succeed out of the business? How do you retire? Those are the two bookends that I don't think our industry is very good at training right out of the chute and preparing people for. I'm very, it's my soapbox that I usually hop on top of when it comes to setting the foundations. And then what is your eventual goal? What do you want to do in 10 years? Do you want to sell your company? These are the two structures that will help you, if you start out in the beginning, will help you be able to easier transition out of your business. So just to show you a little bit of math on an LLC, again, it's for the ideal income of 50,000 to 150,000. Let's just say we have a net profit. I'm going to chat about this for round numbers. A net profit of $100,000. Self-employment tax is 15.3%. Your total tax would be $15,300. And if you're an S Corp, let's say your net profit is $100,000, you now have the ability to pay yourself a salary and have owner distributions. So you and your bookkeeper, CPA, or accountant would come up with a formula that works best for you. But let's just say your salary is $60,000 and your owner distribution is $40,000. At this point, and this is probably where everybody's paying the most attention, your self-employment tax is 15.3% only on that salary, on that 60%. And then you have no self-employment tax on the 40%. So you have a savings of $6,000. As brokers, as realtors, you know, we could go on a great vacation with that savings. So now that we've talked about business entities and the definitional aspects of them, what I really want you to take away from those 4 different definitions is how does it impact your business? You guys are going to have to answer that question for yourself. If you're currently a sole proprietor, that means all of your income comes from, you know, on your 1099, it has your name, Reyna Fonte. It's on my social security number. I turn it into my bookkeeper for annual accounting. If I'm an LLC, I've named it Delve Inc. Delve Inc. I'm a corporation, I'm an LLC, so I have owner distributions, and I'm actually an S Corp. I'm an S Corp. I have a salary and then owner distributions throughout the year. And you have branded yourself. You have a name, Delve Inc. If I wanted to sell my company, it'd be way easier to sell Delve Inc. than it would be Reyna Fonte Consulting. So those are some of your biggest takeaways I'd like you to think about, along with the tax savings as an S Corp when you hit those different income levels, as we go into this next session, which is the Delve's trapped method. Safeguard your business during market highs and lows, making data-driven decision. I used kind of an oxymoron. I want you to trap your money in your safe. I want you to keep as much money as you possibly can and make informed data-driven decisions. The TRAP stands for Track Your Financial Health with Systems and Tools, report and review financial performance regularly, analyze for strategic decision-making, protect your assets and limit liability, decisions and planning for future growth. Tracking your financial health. Okay, so now we are an entity. We've decided if we're a sole prop, an LLC, or an S Corp. Now what do we do? Now we have income coming in. One of the next steps I really encourage anybody that I'm working with to do is get your bank accounts straight. Open up your bank accounts. And by a general rule of thumb, I say you should have at least 3. And this is so that you can plan plan for those tax savings or vacations. And you can have operational reserves. So you need to have a business operating account, a checking account where all your income and expenses go in and out of. It's not, if you are an LLC, you do not want to commingle that. We all know what commingle means. commingle that with your personal expenses. You want to have your business checking account where all your income goes in and all your income goes out. Your salary is paid out of that as well. And I think that you should have a reserve savings account. So we'll delve into reserves in the next slide. And your reserves is saving up for how much you need in overhead. And it should be interest bearing, because that's an account that, why not have your money make money for you if it's saving there, sitting there. Tax savings and vacation, I like to put those in one account. If you rather do it in two, that's great as well. I think we should plan for the good and the bad, the fun and the not so fun. Taxes, anytime a commission check comes in, we should automatically right off the top take 25% off and put it in the tax/vacation savings account. That should also be interest bearing, so that again, your money is making money for you. And currently right now in this climate, we can see savings accounts in anywhere from 3 to 5% of interest. You have to shop around and ask your bank what product works best for you. Tracking your financial health, monthly cash burn. Understanding your monthly cash burn is the rate in which you spend money on it on a monthly basis. And this is going to speak to reserves. Let's say you spend $5,000 on business expenses, that's salary, paid leads, subscriptions, fees. That amount of money monthly is what you're going to want to start using to build that amount is what you're going to want to start using to build your reserve account. Understanding your source of income is also part of tracking your financial health. Where do your commissions come from? From your buyers, sellers, past clients? How many of us right now can say 30%, 40%, 75% of my clients are buyers? If we aren't tracking that, especially with the new laws that came into effect in January, that's directly going to impact us if we don't have a good understanding of where our clients are coming from. So the source of our income, if we knew that 75% were coming from buyers, well, we should have spent the last 6 months really dialing in what we're going to do when those laws changed in January. Again, trapping your income, understanding what you have, tracking your financial health for financial health. I want to give you a couple examples of tracking your financial health. Brenda Broker, this is a past client of mine. I worked with her, and we do annual business planning classes together. We've done it for years. And when I first started working with her, we based it on this is my total sales for the year. These were my expenses and my year-to-date numbers. But she couldn't delve into her business pie, what her source of income was. And she wanted to make some decisions. In talking with her in our first meeting, she wanted to make a couple decisions. She felt she had tried out paying for online leads, and herself, she spent $11,000 on a 3-month program. It took her a couple hours, but after I had her, and she was ready to nix it when we first started talking. It's too much. I don't think I can afford it. I don't think I'm going to be able to go into the 12-month program that they're trying to pitch me. After having her do some research, she was able to tie back directly to those paid leads. She converted for $36,000 of commission. So her return on that investment was about 30.5%. So when she was able to recognize and really identify and pinpoint how much money she actually made on that $11,000 that she invested in those online leads, she was then able to make an informed decision. Now she knows that it will be a total of $43,000 annually if she chooses to go into the 12-month program. But if she can convert in 3 months, $36,000, she has a better chance, and she's able to make that informed decision by tracking her financial health. Excuse me. I'm going to give you another example, Brenda Broker, of Brenda. in the same initial meeting, she was also a relocation agent. So she worked with a lot of relocation clients in her particular area. And she was fixated on the 45% that it caught, you know, of referral fee that she have to pay. And now it's now 50%. It was 45 back then. And I had broker Brenda do the same exercise. Take time to research and really track what income was from relocation. And she discovered that she earned $64,000 in commission from relocation clients. It did not make sense for her to not be a relocation agent. And although she's paid 45%, now she isn't received, you know, she wouldn't have received those clients she wouldn't have received that 64,000. Those are people who moved into her particular area. Additionally, because she understood the source of her revenue, where her clients were coming from, she was able to tie back 6 other transactions that were family members of those relocation clients with no fees attached to them. So because she was tracking and going to continue to track, she will be able to make quicker, more informed decisions. And actually, it helps impact her mindset. She's no longer fixated on that 45% of outgoing referral fees. She can take care of her clients as they come in and not worrying about the commission breakdown. So tracking your financial health, we should have, and I talked about with the 3 different bank accounts, the reserve accounts. Now we talked about what it is to have, what expenses you have going out. And I use that $5,000 of expenses when we're tracking our expenses. In order to be resilient in these market conditions, and 2023 is a perfect year of market fluctuations and business being down. Your prior business was up and then down, and hopefully we're going into a really great spring market. Excuse me. At the most basic level, to help you as real estate brokers and as a business, whether you were a broker or you were a business that sold, I don't know, shoes. General rule of thumb, a very, very minimum 3 months in the 3 to 6 months minimum cash reserves in that cash reserve bank account. Optimally, I always encourage, and what I'm trying to do is help my clients grow to the point where they can optimally have 18 months in the account. I apologize for this. The math is not correct here. This slide didn't make the editing, but 12 months would be 60,000, 18 months would be 75,000. So my apologies for that. There has to be at least one typo in a slide in order to know that I created it. So optimally, you would have $75,000 in your reserve account. And so if you in your reserve account, if you had $75,000, that's going to get you through 18 months of whatever the market throws at you. We've had some pretty crazy markets over the past 2 years. Well, let's go back into COVID. And so being able to not worry about how your bills are going to be paid, being able to focus on your clients, being able to analyze where your clients are coming from and make a pivot and make changes based on where you're spending your most valuable time. One of my favorite my favorite lessons I tell a lot of brokerage owners is I ask them the question because as a brokerage owner, you're working on a lot of different tasks all the time. You end up wearing a lot of different hats. You're a lot of things to a lot of people. So I frequently ask owners, is this $1,000 task? Is the time you're spending on this task worth $1,000? And then I obviously over exaggerate that amount, but it really gets them to think about where they're spending their time. And so if you can have a reserve account that you have enough cushion in the bank that you don't have to hustle, scrape, borrow, we would never steal, but tap into that tax account or tap into our vacation funds, and we could still do the things that we need to do so that we don't have burnout, like go on vacations and making sure all our bills are paid. It's a really important aspect. So reserve funds, most minimum, have 15,000 at the 3-month level, and at the most optimal for me would be 18,000, or 18 months in the bank. The R in the trapped model is report and review, financial, market, and performance. So now we're a business entity. We have that first leg of our foundation. We know that how we're going to be functioning. We have our bank account set up. We're analyzing where our clients are coming from. The next thing we need to do is report and review on that. And the financial aspect of it is pretty basic. It's basic accounting, profit and loss statements, balance sheets, and bank statements. We know what's happening with our money, where we're spending our money on, and we're looking at those monthly. But market performance is also vitally important to report and review on monthly, quarterly, and annually. If you get in the habit of looking at these reports and reviewing them monthly, it's going to become second nature to you. And it'll really help you safeguard your money, and you'll be more agile and be able to make shifts in your business as the market demands. So we want to look at our client pipeline. We want to look at local and national market statistics and industry news. Look at what's happened in our industry. We had the lawsuits. We had the lawsuits that are still happening, that is changing how we will practice real estate. We, at the local level, Washington State, Northwest MLS and Washington State implemented the buyer's agency law that went into effect that we chatted about earlier. If we aren't paying attention to that, those brokers, which I really have to applaud the Madrona group and how they have gone above and beyond to make sure that there was training every time you turned around. They have Jen Knox, who is your, I like to call her, I lovingly call her the compliant officer. She's transaction excellence, but I love how they offer that as a service to you guys. I get to see a lot of different brokerages, and not just in the John L. Scott umbrella. I get to see other brokerages as well. And the level of effort and training that the Madrona group has put forth for you guys is really going to set you up for success. But if you aren't willing to pay attention to that, and you're doing yourself a disservice, and you're harming the success of your business if you aren't paying attention to the industry news and the local and national changes that are happening currently. Analyze, the A in trapped. Analyze for strategic decision making. I'm not going to read you all these questions, but these are some of the top questions to ask when you're analyzing. For me, this is second nature. This is what I do for a living. I work with businesses, and I employ the trap method. I'm asking them for all the pieces of information so that I can help guide them through the next iteration of their business, that 10x growth. So these are some of the questions. And right now, how do economic indicators like interest rates and housing statistics affect my business? We saw that buyers are impacted by the interest rates. Because you work with such a phenomenal group, the Madrona group, they've been talking about interest rates. They bring their lenders in so that they can help you guide your buyers. They're working towards always trying to find ways to mitigate. But you need to ask yourself as a business, how do these economic indicators like interest rates and housing stats affect my business? What percentage of my business is repeat clients? You'll hear me talk about the source of income throughout this entire time. And what am I doing to keep them engaged? How am I diversifying my income resources effectively in today's real estate market? Where are my buyers coming from? Where are my sellers coming from? How many listings do I have? If I focus on listings, will I be more resilient? The answer is always yes. Listings. these questions in order to not only track and report on, you have to be able to analyze in order to and ask these questions continually in order to make those strategic decisions. Protect your assets, the P in TRAP, protect your assets and limit your liability. Highly encourage you to know your business, know it inside and out. Build a financial cushion of reserves to account for market downturns, legal changes, industry changes, and vacations. Protect your business through insurance and legal business structures. I didn't talk a whole lot about insurance because I think that if you have your foundation, the insurance is supplemental. It's supplemental. You'll have E&O through the brokerage. But as your business grows, you'll want to have personal liability insurance. If you are a realtor who has properties of your own that you have in property management, there's special insurances for that. So I didn't delve into insurances because it's very case by case, and each broker is going to have different, but work with your insurance provider and your bookkeeper for that, or, to help with that information. And the final aspect of the trapped method is to decide and plan for your growth. You're going to use your financial insights, your client analysis. You're going to balance your client types. You're going to set realistic and ambitious goals. You're going to arm yourself with informed information so that you can make quick, agile decisions. We as John L. Scott have been beating the drum of business plans. They even offer you an iPhone if you do in a contest. There's contests trying to get everybody to do their business plans. But if you follow the TRAP method annually, by the time October, November comes around, you inherently have an understanding of what your business plan needs to be for the next year. And it doesn't have to be an overwhelming process. If we can change our habits and really help our businesses grow, because we are a business, we're not just brokers, you'll be able to make those quick, agile decisions, and your business plan, your annual business planning will be a lot easier and go a lot smoother. So I've just spent the last half hour or so going over safeguarding our way towards a resilient real estate business. And really, what I want your biggest takeaway to be is that it's vitally important for the success and the longevity of your business to know and understand how to safeguard your business. If we don't have that data, and we make, like the example of Brenda the broker, she would have cut out a third of her income if she decided she wasn't going to be on the relocation team. And so really understanding and arming ourselves with knowledge and setting ourselves up from the beginning will allow us to work through any market fluctuations, any challenges that come our way. Questions? Mr. Jason, are you there?
I'm just kind of waiting for everybody to finish digesting and see what questions they have. I know it's like a lot of information, especially if, maybe some of us have been doing some of it, but not all of it, or maybe some of us have not done any of it. Looks like Ashley's got her hand raised. Do you have a question?
Well, no, I was really excited for this class because I just developed an S Corp this year, and I'm kicking myself from not doing it last year. I mean, the amount of shock and tax difference is incredible. And it's another like growth opportunity, like, wow, I'm really kicking ass. I better save myself. But, just your point here about opening up 3 different bank accounts and really separating. I have 2, one for taxes, but I never even thought about putting one for reserves or vacations. So I appreciate that. But yeah, if you're making and rolling the dough in, you guys, S Corp is the next move.
I'm going to stop recording here real quick.